So anyways, hey, my name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWade.com, an ECN that gives traders access to Forex, energies, metals, indices, binary options, everything wonderful in the world. And you say, well, Wayne, there's lots of brokers that offer that. How cheap's your spread? How cheap's your spread? I think we're pretty competitive. But let me tell you, the one thing that differentiates Traders Way from everybody else is that I actually love you. I'm in love with you. And, not a weird, creepy way. I care about you. So, with people every single day. Every single day. And I'm here at FX Street every Friday. Every Friday, I'm here to help you. And I have nothing to sell you. Isn't that cool? I just want you to succeed. In fact, I want to know that these sessions have contributed to at least 1,000 extra pips for you in profit. So I hope we're getting closer to that goal. By the way, how long have I been doing these webinars at FX Street? How long? Yeah, 10 years. 10 years. 10 years. Holy smokes. You know what I mean? So anyways, every single day I do make myself available to Traders Way clients. And then I'm here every Friday at FX Street, whether it's non-farm payrolls or this technical and fundamental event that I'm doing today. What I'm trying to do is take my many, many years of experience, and I've sat at my desk staring at the charts, doing research on fundamentals and macroeconomics and central banking policy. I've been diligently studying as full-time career and then some for a solid 10 years or more, actually more. So I have a lot that I can share, good, bad, and the ugly. And so I leave it to you to ask questions. Sometimes you can ask a simple question. I can talk for 40 minutes because, maybe it's a brilliant question. Maybe it leads to somewhere else as well. So you are the boss. I am the humble currency trader. I'm here to help. I want you to succeed. I want you to not just get in a good trade. I want you to develop positive trading habits and real skills that you can apply to your trading every single day. And then here's what I would like to ask from you, if you don't mind. Once you're successful, after I share what took me blood, sweat, and tears for years to learn, now all of a sudden you're in a hyper learning environment. Once you are skilled and once you do have confidence, would you consider Traders Way as your primary broker as you develop a trading business that will be profitable for many years to come? Would you consider that for me? Yeah. So it's sort of a pay it back model. We're investing into you today, helping your future become successful, and then maybe you'll pay it back through loyalty just by choosing us as your primary broker. That's cool, right? Yeah, Harry's already there. Horace is already done. Thank you, sir. Yeah, so that's cool, right? I hope you don't mind me throwing out the business model. It's not really a sales pitch. Just want you to succeed, man. Now, is anyone getting close to the 1,000 pips? I think I've been doing this Friday session now for 6 months, maybe? Maybe about 6 months. Is anyone near there or getting there? Already got there? Almost, there used to be a forum on FX Street, and what I do after an event, I'd ask people to leave comments, and there was something like, I don't know, no joke, there was something like 5,000 comments on that page. It's almost a shame we don't have something like that to document your progress. That'd be really cool. But I hope you're getting there. If you're not trading real money or stuff like that, if you're just still trying to find your way, have you picked up a few things that are making you feel like there's hope, like there is a light at the end of the tunnel, or are there glimpses of genius that you can see it? Maybe you're not there yet, but you're starting to see it's possible. Yeah? Cool. Right on. Is there anything in particular that seems to be, grabbing your eye or your attention? Is there some sort of aspect of what I'm sharing that's starting to click with you? What would that be? Fib method, okay. Fundies, right on. Support and resistance and fibs. The tech fundy combo, yeah. All right, Andy. Yeah. Support is picking direction, reversal patterns. Time frame, smaller time frames. That's interesting. I'm working with someone who's in the opposite. He's like, "Oh my gosh, wow, it's amazing when you add the longer term time frames." And I'm like, "Yo, so cool. You're great at fundies too." I try. Yeah, I try hard. So that's cool. Oh, more about emotion control psychology and trading, and yeah, leave the trade. Yeah, okay, all that kind of stuff I do cover too, isn't it? It's actually one of the harder parts of trading, isn't it? The psychology part. Like, can you guys see this Euro USD trade? Yeah, Mark's like, this is my issue. Yeah, well, talk to your mom, right, Mark? And if it ain't your mama, it's your papa. Um, I can't trade. I have mama issues. Anyways, hey, this is a tough gig, let me tell you, right? But I faced a very interesting challenge yesterday. We were about here, and I'm short this pair, and we were discussing, should I stay in or should I get out? Should I stay in? Should I get out? All that kind of stuff. Because I got some pips on this, and yet I'm giving back some in opportunity cost. And so one of the things I went through for Traders Way clients is discussing the psychology of the trade. Do I enjoy giving back pips? No, of course not. But when do I take profit? When do I jam my stop? When do I take a walk? Love it, leave it, hold it, all that kind of stuff. How do you make that decision? And isn't that like a big part of being a trader? I mean, it's a big deal, isn't it? How do you make such a thing? Have the fundamentals changed? Well, it seems the media actually seems like they believe what the Fed has told people through the meeting minutes, that there's a higher chance of the Fed raising interest rates. Is that what you're reading? Now, I taught you how to look at the Fed funds futures market to read what the actual people with money are saying. Did anybody actually look at the facts, or they just follow the newspapers? Because I hate opinions, man. Right? It didn't change at all. It went from 68% to 68%. And what dictates that 58% or that 68%? Actual interest rates being priced in to short-term money market trading. Okay. Well, now it's a whopping 71%. All right. Okay. I mean, but is that a dramatic change? Yeah. Well, it's a Fed watch. Yeah. So what you do is you look at the pricing of various Fed funds futures contracts over, a series of months. You look at their price, right? Price is going to dictate risk because they don't really actually pay a coupon payment. There's no actual yield, so it's a discount bond. So the change in price will show the change in expectation in future interest rates. So you can look at those, and then you take the difference between the 2 months, and then you apply it to the front month, and then you can come out with the probability. And, basically nothing's changed. So that was part of my thought process. Has anything fundamentally changed? Well, no. But we did hit a reversal pivot point. A lot of shorter-term traders, like let's say you're only in this trade a week. If you shorted at the central pivot and then you find yourself at M1, is it a good idea to take profit? Well, of course, that's why it's there, right? Right? Look, if you don't use pivot points, it's fine. But if you have pivot points on your chart, I mean, that's like a slap in the face. Hello, take your profit. Hello. I mean, that's why that area is green. What does green mean? Down or up? Now, I believe it means down in Japan, but I got caught somewhere. But in the Western world, let's say green means up. Do I still have you guys? There was a change in the webinar, and I'm not sure if I'm still presenter. I guess I'm okay, good. All right, so green means up, right? So you're supposed to take your profit if you're on a shorter time frame, right? All right, so I'm like, okay, it's supposed to bounce. Should I freak out? Not yet. Not yet. Has anything fundamentally changed now that, at least the media is more certain of the Fed raising interest rates? No. Okay, but I don't like it. I'm a bit concerned. The price action's up. Okay, yesterday at this time, we hadn't made a three-wave correction yet. So I back out and I say, well, what does it mean technically? Okay, let me update this, I guess. What does it mean for me technically? When will it technically be bullish? And so I started looking at like support and resistance areas and all this kind of stuff. And I know early bounces on the fib level or pivot level often leads us back to the weekly central. And so I basically came to this conclusion yesterday, and this is what I was talking about with our Traders Way clients, is that as long as we're below this area, this sort of weekly M3 weekly central pivot point, that I'm going to stay short. Because I think after that, if we're up here, it's just too far. And, I don't know. At that point, I would get out. And I'd have pips, of course. But, so it was a real discussion yesterday. I had to make the choice. So far, 24 hours has gone by, and I'm basically still where I am now, back then, right? So at least it's less up than it was yesterday. Yeah, Kenny's like, definitely had a higher high, higher low back then. And I'm like, yeah, well, that was the concern, right? So the decision I made is, I'm going to, as long as we're below this technically, I'm okay with it. I may not have liked to have given up these pips, but if you're going to be in it to win it, sometimes you got to, stay in. I mean, I don't know. It's just, could you add a new position and stuff? Yeah, but I'm not teaching that with this type of thing, right? This isn't a portfolio management issue. This is how to let your winners run. So that when I took this trade, that was the discussion, how to let the winners run. So this is just an example of that. And then, we get down to this key area and with a key risk event as well with those meeting minutes. How do you behave as a trader? And so I did that live yesterday, went through that decision-making process. And, so I feel better today, right? Why won't that grab? How weird, it won't grab that. Oh, it keeps grabbing the pivot instead, I see. There it is. All right, so I feel a whole lot better now. Well, see, that's the question, right, pal? Like, why take profit? So when I had 300 pips, I noticed that my limit was there because I automatically had like a 100, 300 OCO, just automatic. And all of a sudden I'm like, oh no, I'm going to get knocked out. Oh no. So I quickly, right at the last second, I had like 298 pips. And I grabbed the limit and I dragged it away as quickly as I possibly could. And, I don't know. I'm just going to let it run. But why even have a limit? Well, it's just how I work. I always have two stops, one for profit, one for loss. It's just, I don't know, many, many, many years of survival skills, I guess. Right? I mean, look, I was even interviewed on Bloomberg Television about the OCO, right? And I told Bloomberg Television, hey, I always trade with two stops, one for profit, one for loss. I mean, right? So I guess I have to do it. So there you go. So I'm just gonna, let it do its thing. If it comes up and double tops a weekly central, I think I'll still be okay with it. But, boy, this is the big moment of truth, though, right? Where we are now. Because, we're facing this area, right? And this looks kind of bearish on this time frame. So I'm just like... Well, Powell says, even on the carry trade... Well, the interesting thing about that is even when the carries were huge, right? When the spread on the Kiwi dollar versus the Japanese yen was 8.5%, that's huge money, right? My God. But even then, the pips are worth even more. So the interesting thing about carry trades, and this is where it starts messing with your mind when you get into a carry trade, guys, and you have a basket. You start adding it up, and you're like, well, I'm making a ton of money every day on interest payments, but I have so much in pips now. If I just take my profit right this second, I'd be paid in pips, and those pips would be worth the same as holding this position for an entire year. So you start messing with yourself and you're like, so I could just cash out and then try to rebuild, and I would make more than if I just held it now for a year. You see what I mean? So you're like, I got to get out. I got to get out. I got to get out. And I actually wrote this in my book 8 years ago. That there's an interesting thing. Amateur traders are always constantly worried about losing money. Professional traders lay awake at night when they're supposed to be sleeping. They're in bed and they're tossing and turning around. They're like, right? They're all upset and worried. It's in their head and it's in their stomach. Oh, I got all this tension. I think I got an ulcer. And you know what they're worried about? The amount of money they're making. But I can give it back. I'm going to give it back. It's going to come back. I'm going to wake up and all my positions are going to be knocked out. I'm going to lose all that money. I'm up so much. I have to get out. I have to get out. And it's tough, man. And when you're on a portfolio earning huge carries, but the pips are worth, 50 times more, and you're on a huge pip win streak, you can't sleep at night because you're like, holy crap, if I just take my profit today, I'd have the equivalent of holding this portfolio for one entire year. But I don't want to get out because I'm making so much money and it requires no work, right? All of a sudden, it's really tough. I'm telling you, you're tossing and turning. You just don't know what to do. Ugh. Right? So almost, like this is a mini version of that, right? So how many pips are still in this? All right, 325 pips. Well, yesterday this dropped below 300 pips. I could have freaked out and just took it because why? Because it's some magic 300 pips. Who cares about the magic 300 pips? The market doesn't care about where I entered. I mean, look, this is not even a good trade. This is just a discussion at that moment on how to hold a trade. We should be short way up here. I should be embarrassed that it's only, that many. But the thing is, you have to make a serious decision. Do I get out here or do I stay in? Well, imagine you had 35 open positions. Okay? 35 open positions. They're paying you interest every single day, and it's huge. But this one day with almost 100, well, this was 100 pip pullback, you lost 3,500 pips. You see what I mean? And you're like, oh my God, I can't handle it. I'm losing all my pips. It's worth so much money. I have to get out. And and you get spooked out pretty easily. And then what happens to the market when carry trades get spooked out of their positions? It falls fast. It's a avalanche. Because what happens is that other stops get knocked and it falls farther, and then other people freak out because now they've lost 5,000 pips, and so they get out of that, and that gets other people more stops and more panic, and all of a sudden, whoa! And that's usually when I get knocked out. Sometimes when I start to feel like carry positions are near the top, I'll jam my stop like 2 average daily ranges from the top. So 300 pips from the from price, and I've had it where I wake up the next day and I'm out. It moved 300 pips in a day. 300 pips in a day, like the yens, right? And I'm out 30, 40, 50, 60, 70, 80, 90, sometimes 100 trades, or I'm just wiped out one day because I jammed my stop on all of them. I'm not wiped out. I'm cashed out, right? I spent a year building a portfolio, and in one night, and I say, well, thank God I felt like we were at the top. Because a carry trade, when the whole herd is nervous, they spook easily, right? And you can get a stampede very quickly. So anyways, that's what I mean about being nervous. Oh, hang on. I spilled coffee on myself. Mama's going to be mad. All right. So that's that. So that there's a sort of a trader psychology aspect. It seems like I'm here. It's good. It's working out. So what would you like me to cover today? Beast. All right. Beast giveth and beast taketh away. Oh, wait, you said pound dollar. For some reason, I looked at it as pound yen, or was it pound yen? Pound dollar? It's funny. I thought I saw pound yen, but I don't see it. All right, so it wasn't beast. All right, let's go to pound dollar. Actually, Timmy says Aussie approaching. Yeah, you know what? Let's do that first. I missed a beautiful trade while I was coaching yesterday. Oh. And it was on Aussie yen. So why don't we look at it as a follow-up? I totally missed this. Can you imagine? I guess I got to go to a 15-minute chart. Yeah, we were right here. I can't even fit this, so hang on. Let me turn that off. Turn the scroll off. So we missed this. I was right here, and it took off, and just missed. But Aussie yen, beautiful move here, right? So you have to realize that beautiful roll reversal, right? You see that used to be resistance, now support. Oscillator kicker. Ripper, huh? Off of a little pivot. Isn't that nice? That's nice, isn't it? Double bottom first, then a higher high, then down to the higher low off the roll reversal. And then even on a 5-minute chart, if I can find that, let's see if it'll give it to us. Oh, where is it? There it is. Okay, higher high. Look at this. Beautiful, huh? Boom, right off the 382. Long and gone. Just slingshot. Up into the reversal pivot. And do you think traders here took profit? Amazing, huh? Do you think traders are using pivot points? Yeah, pretty clearly, huh? So check this out, right? Let's say you entered where around 88, let's say 20, 88, so quick 25, 30, 40 pips. Very nice. Went a little higher. Why did it stop here? That's also a pivot point. I don't know if you can see this. There's a higher time frame, I think. I think that's a monthly pivot inside a weekly pivot profit zone. And that's kind of where we are now. So I'd be neutral. Friday in the pivot profit zone, sort of done. Okay? But the pattern, though, and I was just so bummed because I was coaching as it was happening and, like, just missed it. Could only do so many things, right? But look at that. That is just ripper, man. That's beautiful. Okay. Lufle, right? Beautiful little pattern. Just lovely, man. Just absolutely lovely. Love that stuff. Should have been in it. So now I'm neutral because it's the end of the week and we're at the target for the week. I mean, what else do you want it to do? I want it to go forever, Wayne. All right. Hope is not a strategy. Take a look at it on a slightly different time frame, and we're in this process. Okay, break out of the range. So I might have deleted this, but okay, we had like a range going on. Break out of the range, retracement, 786, which predicts a double top, which it actually ended up doing. Which is kind of interesting, isn't it? Okay. Came down to the old support, broke out again. You notice how it retested? Right? There's the retest, right? Breakout, pull back, long and gone. That's what I'm saying, like it was an easy setup, right? Easy setup, and just missed it. Just was doing something else in the moment, right? And I hate entering trades sloppy, so I just let it go. But look at that, huh? So many wonderful opportunities that we should be thankful for. Let's get rid of some of this stuff. Okay. And notice this one, we're almost to the 1618 of this previous move, but really if you're going to measure it that way, I'd measure it like this. But, that was just a different conversation. Okay. And do you remember what this is? I actually traded this with somebody that I'm mentoring. Aussie jobs report, yeah. You got it. Okay. Look, it produced, right? Maybe not as fast as you wanted it. Oh, but it produced. Yeah. Yep. Yeah, pig getting slaughtered, huh? All right, so someone was talking about that. So let me show you. Let me move over there. Thank you for letting me talk about Aussie. Oh, you're talking about YJ had a trade on that? Right on. Yeah, YJ is great. All right. Okay. So let's zoom in here. I have no problem with this falling. That's sort of the role reversal area. some pivots. And does anyone believe that this could have something to do with the monthly pivot point? What do you think? Coincidence? Yeah, amazing, isn't it? Monthly central pivot point. So let's just, again, confirm. Remember, we're reprogramming the brain, right? Neuro-linguistic programming. Let's confirm it. Do institutional investors use the monthly pivot points? Yeah. So as an amateur trader, should you trade without monthly pivot points? Hans is like, why not? Nick, did we just hit a record low on Baltic Dry Index? Wow, BDI going down. I think you should pay attention. Seems to me you should have known that, right? I mean, look, it reversed the market. I don't think even one pip got above that. That's pretty remarkable, in my opinion. Boom, 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 boom. So that's beast, no, not beast, pig dog. I think I have this drawn up over here as well. I go down, 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 and the flames get higher. No, I don't. Let me go back then, sorry. Burns, burns, burns. Hey, has everyone subscribed to my YouTube channel? Where my videos are posted? Yeah, you guys are. Would anybody would you like it? You want the link? Would you subscribe, please? There's you get at least a video per day, but it's usually a little bit more than that. Where's this larger time frame one? I know I have this marked up. Oh, there it is on the daily. So there we are on the macro. You like the macro? You like the macro? Okay, cool. Now look where we bounced up off of this area. And I'm pretty sure I had this drawn differently on a different chart. The basic same idea, but I thought I'd nailed it on the other one. But you can see what's going on here, right? So let's do this. In fact, let me unscroll this so we can get close, and I can show you what I was doing on the other chart. All right. So I'm taking this wick here, and then I'm adjusting down to this lower wick, right? This one here. So I'm trying to capture them both, okay? So we're good, right? Got these wicks, got these wicks, got these wicks. And then I drag it across and snap. Let the pips be pips. Yeah. Isn't that awesome? Look at how this is, right? Oh, yeah. Isn't that cool? So this is what we've been following for months now. Actually, technically, we're following it over a year. Um, but you can see this rollover process is interesting, and that we're in a zone where if the downtrend is going to continue, it should do it now, right? And then you say, well, I wonder if I should, I wonder if I should sell the monthly central pivot point. Well, somebody said yes. Down, 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 and the flames get higher. Oh, a 618. Yeah, boy. So that's cool, huh? And so if this shorter term move, let's say if it's a 1 hour trade now, or that's not quite right, right? How about a 4 hour trade? If this 4 hour trade drops like this, I like to leave these little mementos for myself. Okay. Then that move here should lead to the bigger move, which is this one, right? And that bigger move we've been trading all year. This trade plan here of retracement and drop, I did in December. December. Well, it's November now. So that's just one trade plan for a year. Right? But it puts everything in context. You know, how do you trade these massive pullbacks when it rolls over at the 50%? How do you trade it? Well, I have this giant, arrow pointing down here. Lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. I mean, how do you trade it? Well, a lot of people trade it chasing their tails, right? Problem with that is you never catch it, but even if you could, you're still going to get bit. It's a lose-lose. So it's nice to have plans. Now look at that though, huh? Holy smokes, eh? So let me ask you, is the monthly central pivot point important? Because we know the top is the monthly central pivot point to the pip. Redonkulous, isn't it? So that just okay. So now what? You gonna try a second chance? Do 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 do. Do 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 do. Maybe something like that. What do you stink? Smell like a plan? Oh, look at this beautiful trade. Oh, look at that. Up, down, 2618. Didn't even see that follow up. Look at that. So notice this, again, higher, high, higher, low, buy off the roll reversal up to the top, right? Same as always. I know we just do this, hours and hours and hours every single day. But look, there's the old resistance. There's the old resistance breakout. Pull back, buy it. Now it's a roll reversal, so old resistance is support. And look at that. It even went up here, made the 50% and slingshot up to the 2618 and stopped. I didn't even notice that one. I love it. That's why I love leaving notes for myself. Boy, look at that. That's beautiful. Oh, did I insult you, Onar? I'm sorry. Will you forgive me, please? Really? Well, I really apologize. I don't want to waste your time. Yeah. Oh, boy. Oh. Come on, owner, lighten up. What do you want, dude? Give me something to talk about. Planning from December or for December? You mean, yeah, okay, but what do you mean by December? For the interest rates? See, I think everything is essentially in place now, right? So if you talk to me in February, right? In February, the market was absolutely certain the Fed was going to raise interest rates. And I was absolutely adamant that that was never even a possibility. And I had that opinion because I do track the fundamentals, and I didn't believe the fundamentals were there, both domestically and internationally. But also, if you actually read the meeting minutes from the Fed, if you actually listen to the speeches and download the presentations and read their reports, cruise the various Fed websites, it was absolutely totally clear they had no intention whatsoever. Absolutely none. And this remained all the way to about August, maybe late July, early August. And then the Fed actually changed their tone, and what they said was they were going to raise interest rates by the end of the year. And I thought that was interesting because I didn't see the data yet. I didn't see the need. I would not have changed my opinion. But when Grandma Yellen tells you they're going to raise interest rates by the end of the year, you kind of have to believe it, I think. And this progresses, the market was certain the Fed was going to raise interest rates in September, and I suppose they could have, but we still weren't quite there, right? So now the Fed has been hitting people in the forehead with sledgehammers, trying to get them to understand that they are going to raise interest rates. So, do I care about weekly jobless claims right now? I talked about this yesterday, since that's when weekly jobless claims come out. And I'm like, no, 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 no. We're near full employment as it's being measured. We don't have to debate what that means. It's just as it's measured, we're near full employment. The Fed is going to raise interest rates on December 16th. Okay, so I got all that in place macroeconomically. So now what I'm watching is things like industrial production capacity utilization, average hourly work week. I'm looking at wages for income because we know an increase in income will increase in spending, which will create new orders, which would increase industrial production capacity utilization further, which would create a scarcity of resources both on manpower and input. You see what I mean? So then you take all of that, and there's your inflation. So if anything, as an economist, I've just sort of changed my focus now of what I'm studying because there wasn't a need to pay attention to industrial production because there was no jobs. You didn't have to look at wage growth because we had 7% unemployment. Well, look, if you got some orders at your factory or whatever, obviously America's not a factory, but you get the idea. If you got new customers, let's say, and you needed to increase your production, well, you can hire anybody. There were people available. right? So anyways, it all, if anything now, it's just changes the focus. But really, I think the Fed, if I were to throw out my guess, if you don't mind it being a guess now, I think the Fed will raise interest rates, maybe 1% a year, maybe not even that much. And that would last for years, really. Okay, so my bigger, stronger focus is really on green shoots in Europe. And what we're seeing with the terrorist attacks and potential closing of borders and all that kind of stuff, because we know terrorist attacks are not good for business. So if anything, what this does is creates quantitative easing in Europe all the way, not 2017, but 2018. So we need to look at jobs in Europe. We need to look at various other things to start looking at green shoots. Because I think if we can save Europe, we're going to save China, and if we can save China, we're going to save Canada and Australia and South Africa and Brazil, and it's a big global world, and the only game in town is the United States. But like I was talking about yesterday, if you're a Trader's Way client, one of the things we were talking about yesterday is the domestic economy and how it's unique in the United States, and that really if China and Japan stop buying U.S. debt, it would hurt China and Japan a lot more than it would hurt the United States. Eventually it would create inflation in the United States, and they would have to then cut back on government spending, and maybe that would hurt. But it would change a lot, but I think it would hurt those economies, Japan and China, for example, a lot more than the United States, because the United States, 70% of its economy is domestic. What percentage of the Chinese economy is domestic? Like what, 0? Right? DeBeesta says it's 30. Is it 30? I'll believe DeBeesta. But still, wow, right? So that's. I'm just sort of getting. We're waiting. I know one thing we could talk about for Omer is there's going to be a surprise in the first quarter, like February, in the United Kingdom. And it's a good surprise. Would you like to know what that's going to be? It's going to be a surprise. Nobody knows about it yet. So you can't tell anybody. No, I don't think the rate hike will happen then. No, there's going to be a surprisingly good GDP out of the UK. It's going to shock the world. Holy moly, look at the GDP for the UK. Wow. And then that will allow the Bank of England to raise interest rates. So Bank of England will raise interest rates sort of like June. Okay, but they need to set the table, light the candles, have a glass of wine first, before they get down to business. Okay? And the answer as to why is how you calculate GDP. So how do you calculate GDP? Right? You have what? Consumer spending plus business investment, which is just business spending, right? Plus government spending, plus imports minus, imports. Oh, wow, that didn't draw very well. Minus exports, right? Or did I get that way wrong? Exports minus imports? No, exports minus imports. I got that backwards, right? X minus M. Okay, that's GDP. You have I plus E. Did I get it backwards, Kate? Whatever. I didn't know we were being tested today. So anyways, we don't need to even worry about that today. So what I'm talking about here is the calculation of these inputs and stuff, right? And I think a big part of it is the C. And over the last, well, let's just say last year, first quarter, and I believe even the year before that, the UK had really bad weather in the first quarter. Net exports, so exports minus imports. So that, yeah, so I had that, right? X minus M. Yeah. All right. So anyways, we had really bad numbers. Even in the United States, it was the same thing. Terrible first quarter numbers, right? So what's going to happen, assuming we have a normal year, assuming average, right? That the bad number from last year's GDP, because remember, we look at year over year. So let's say this is last year. This was a big, terrible number, right? -1 or something, whatever it is. And let's say this new information comes in, and let's say, in compared to -1, let's say the new quarter is +2 or something. I don't know. I'm totally making it up, right? A positive number versus a negative number. So not only does the negative number get dropped, but the positive number gets added. And that's a big difference because the difference now is 3. You see what I mean? And all of a sudden, holy moly, right? But, business investment, that'd be pretty steady. What about government spending? The interesting thing about government spending is they budget, a year ago for this year. Do they care about interest rates? Does government care about interest rates? They're planning their budget this year for next year. So they have no idea what the interest rates are going to be, but they're going to spend the money. You see what I mean? So let's say, what is it, 2015, right? They just came out with the 2016 budget, right? So in November of 2016, are they going to issue bonds? Of course they're going to, issue bonds. Of course they're going to borrow money. We already know it. They've come up for a budget. They're going to spend the money, so they need to borrow the money, and they're going to do it in November, let's say, of next year. Well, what if interest rates are higher? So what? It's a government, right? Government doesn't care about cost. Your government cares about cost? Where do you live? Venezuela? Right? So the government's going to spend, right? Now, business investment would change with higher interest rates or higher expected interest rates and all that kind of stuff. So, but whatever, at that point, this should be pretty steady because 0 is 0. And all right, so and C is going to go up, I is going to be steady, G is going to be steady. So anyways, GDP in the first quarter, GDP UK, is going to be surprisingly good. And this will give permission, especially since the Fed will already lift it off, for the Bank of England, Mark Carney, to raise interest rates, if that's what the MPC wants to do. But that'll happen in June. But they can't even discuss it till they get the awesome GDP. Holy smokes, look at that GDP. Well, it's just how you calculate GDP, that's all. That's where I'm getting that from. But, Omar, I explained that in August to get ready. I did a video on it. It's actually on YouTube, guys. Did everybody sign up for the YouTube channel? I did a video in August about that. Can we find it? What do I call it? BOE. Oh, I didn't. Hang on. I did it in the wrong spot. Hang on. I got to do it here, right? Yeah. BOE. This channel, no content. That's not true. Well, it's in there somewhere. So, yeah. I forget what I would have titled it. But anyway, so there is I go through and explain it back then, but that was in August. So that's how much was it August 6th that I did it? Cool. Well, there you go, Artem. Thank you. So if you were around August 6th, you already know this information. Isn't that cool? You already know it. You're like, yeah, I know that. Thank you. So yeah, if you guys want to be on my team every day, I do make myself available to Traders Way clients. Maybe open up a demo account. Feel free, no cost. All right. Any other? Yeah, let's do another one. We got time for one more currency pair or one other fundamentals question. Or, I mean, do you guys want to? By the way, Canadian retail sales. Wah, wah, wah. Canadian CPI. Good job, Canada. 0.1%, eh? Wow, that's some ripper awesome inflation. Good job, Canada. CAD yen, nat gas. Do you guys want to do commodities? Just burn through some gold and some oil, maybe look at the stock market? I don't know. Did you subscribe to my YouTube channel? I don't think so. I don't think anybody did. Still says the same number. I don't know. I think you did, but you may not have. Yeah, I know, I know. You all Pan comments every day, and I appreciate that. Gino did. Which one? Oh no, no, I'm so busy these days. Oh no, I'm sorry, Gino, and I don't think I'm going to be able to do today. Shoot, dude, sorry. Oh, yeah, you know what? FX Street's got a copy. Uh, Moderator, are you available? Are you around, moderator? FX Street extraordinaire. I don't know. If the moderator's available, there is a 2-hour video on fxstreet.com. I don't have the link. It's a 2-hour video. We'll give you overall of the strategy. Okay? So I don't know. You know what? It might have been on the sign-up page for this webinar. Are you kidding me? Yeah, it probably was. So, anyways, I'll see if I can get that for you right at the end here. No, 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 no. It's on FX Street. I don't know what this is. It's called Strategic and Tactical Forex Trading. All right. So, anyways, let's do some oil. That's on people's mind, right?
Just note for Greaves following the
Oh, do I want this chart? Well, all right. First of all, what do you notice about this? I open up my oil chart. What's the first thing you notice? Oil on the left, USD CAD on the right, and I'm trading them one for one. Isn't that cool? Okay, so if oil goes up, USD CAD may go down. Another thing that you could do instead of this one, in fact, let's just do this now. Oh, don't want to make Omer mad. Professionals are not allowed to have fun. No passion for professionals. Check the love at the door, dude. Here, let's do CAD yen. Just make it easier. So the theory here is if oil goes up, CAD yen goes up. Hello, I am a professional trader. Okay, so that's one thing. So I think I have it drawn up over here. No, so I switched it, Kevin, to CAD yen. Haters gonna hate. Shake it off. You guys are awesome. Thanks for being on my team, guys. That's cool, man. You're good people. All right, so yeah. So we got this kind of set up here. Here's the range. We're getting squeezed, aren't we? We're getting squeezed in here. The trend is down, but it's less down and it's less up. And look at how this just continues to get squeezed and squeezed. So, typically what you do is you can wait for the break and then trade the break out, right? I'm going to move this down here. Wow, come on. Look at this. It won't move. Tough day, man. Tough day on the charts. Okay. Okay, there we go. So it keeps making lower highs, but it's not making lower lows. So it's going to get tougher and tougher to trade. One thing that you could look for are breakouts and then pullbacks is one way you could do it. I think it's going to require a little more effort on the upside, though. I have a feeling like if it breaks back up to here, we just go back into a bigger range. But a breakout strategy, if it does break out, is going to look like this. Now, typically, and here's sort of a hint, fake outs tend to happen before you hit the apex of the triangle. So if you're going to wedge it like I have here, and maybe if I put it back the way I had it, for some reason I just won't do it. If we put it back, let's put the floor there. The apex would be where they meet. Okay? And the closer to the apex you are, the more reliable the breakout. Okay? All right. So there's that. If you're going to trade it technically, I would rather get a breakout down here. Down here, which would be what, Monday? Tuesday? That would be more believable to me. Okay? So right now, there's just uncertainty. So maybe something happens over the weekend and everything's good, right? Maybe. I think there's potentially a little more downside than upside, but I don't see why we can't come down, tickle 40 or even 38. I'm not saying it will, but I don't see why we can't. Okay. Now let me comment here on the someone says that oil's going to go to $100, right? And he said no more down, so it's going to go back up to 100. Well, no more down. Okay, fine. I understand that logic, and in particular, if your outlook is you're going to make an investment for a year or two, sure. Right? Sure, that's cool. I can see your logic. Even if it dipped down to 40 or 38, most likely in 2 years it'll be higher. So yeah, time horizon, sure, I see what you're saying. I'd probably in that case buy like Schlumberger stock or something and hold that for a 10-year period and probably be fine, right? But let's talk about oil going to 100. That ain't going to happen, my friend. And let me tell you why. Oil's down right now for two reasons. There's a demand side and a supply side issue. The old school, analysis of this industry was demand only, okay? Because supply was supply. You only had so much oil, and that was that. That's all there was. So even if you had glut, once demand picks up, you can burn through the glut and draw down the inventories, right? And by the way, I've looked through 50 years of data on this. 50 years of data on this to figure out the annual peak oil and all this kind of stuff. I totally got into it, right? So anyways, it always was just a demand side because there was only that set amount, okay? And if you drew down supply, prices would go up. Fine. So 5 years ago, you'd be right in this case. If it ain't going to go down below where we are now, then it's going to go back up and demand will kick in and this will go up to $100 at least. But the issue now is demand is low. Well, in 2 and 3 and 4 and 5 years, global macroeconomics will pick up. Demand for these commodities will increase and the prices will go up because demand will go up, and that's the demand curve. But the supply curve, however, is interesting because there's been a technical revolution, and fracking will keep supply at least at equilibrium with demand. Okay, so I think oil could go to 50 or 60 bucks, but I don't think it's going to go higher than that for a very long time. I do not foresee 100 or even 90 or even 80 or even 75 would be pretty hard for me to believe oil. Because I believe once you get to $60 a barrel, the frackers are just going to add more supply and bring prices down. Because there's two things that can happen, right? Prices go if demand goes up, right, prices should go up. But if supply goes up, prices should come down. And where they meet, supply and demand equilibrium, right, will dictate the open market price. And I think we can always add to supply now. Okay? I believe we can always add to the supply. When I say, and I mean, let's say over the next 5 years, 50 years, 100 years, I don't know. Okay? But $100 a barrel in the next 5 years, I don't foresee that. Ask me 4 years from now, maybe it'll be different, but I'm basing my information on, again, it's a technological revolution. It's similar to saying, when it comes to business, fracking is to oil like the invention of the internet is to business and global communication and supply chain management. Like, holy smokes, in particular in the United States where it was developed primarily, right? Because I lived in the Silicon Valley, efficiency skyrocketed beyond belief. One worker could do a lot of work because of being able to communicate and track and collaborate and all these different things that the internet allowed us to do. So fracking is very simple. And just one sort of comment on that. In the old model, if you found oil and it was worth drilling, you could start to try to bring it out of the ground, but it would take 2 years and many, many, many millions or even billions of dollars to pull it out of the ground. 2 years before cash flow started. You start drilling, 2 years later, oil goes into a barrel and you start getting your investment back. That 2-year cycle, for example, in Saudi Arabia, is still a typical cycle. Fracking is 30 days. If you're in West Virginia or Pennsylvania or South Dakota, and you got some oil on your land and you decide you want to bring it out of the ground, you could borrow the money, start drilling, and then before your first interest payment is due, you're already selling oil. So if prices go high because demand is increasing and that's drawing down supplies, frackers will just add more oil. And it's not just in the United States, it's going to be global. There are countries around the world that have never produced oil before that suddenly have oil. And this big city that Brazil was going to build that was going to float out at the ocean, that ain't going to happen anymore. That ain't going to happen. Why would you spend all that money when you just get it from somewhere else easily? So that's a big loser for Brazil. Sorry, Brazil. So that's my thoughts on that. So, wow, look at that. Click 8:45. I think that's our webinar, right? Yeah, right? I think that's it. So, thank you to FX Street. Peace on earth. May the pips be with you. May our profits be above average. I'm so sad that you didn't sign up to my YouTube channel. Maybe I'll give you one more. But I honestly hope that we didn't talk about any particular individual strategy today. It's just where you led me. But I hope that you are implementing some of the things we've talked about over the last several months, and I hope you are starting to find some success or even at least confidence. No, I'm not going to do that today. So thank you guys and have a wonderful weekend. Thank you, moderator. Appreciate all that you do for us. Yep. Maybe consider taking that course at the University of Essex. Like I said, I do homework constantly. I'm in class. I do one class a week, and then I have one, what do you call them, where I get together with the teaching assistant, the fellow, and do that once a week. And then, of course, I have textbooks, and I'm doing research on the internet and stuff just for my class. Okay? So, you should consider it. You know, enjoy it, man. I like being a 42-year-old college student.